Hi, I'm Brendan Casey, General Manager Investments with Rest Industry Super. At Rest, we strive to provide you with the best retirement possible, which is why we take a long-term active investment approach to managing your retirement savings. We've reached the end of the first quarter of the financial year, and we're delighted to announce that Rest's core strategy, in which over 90% of our members are invested, has produced another strong performance. Over the past 12 months, the core strategy has returned over 9%, well ahead of its long-term target of 3% over inflation. Overseas shares were the largest contributor to these returns, with Australian shares and our growth investments, such as agriculture, also contributing strongly. Overseas shares continue to be a key component of the positive returns we're experiencing. Those in the core strategy with an exposure to overseas shares benefit from the record highs reached by the US share market during the September quarter, underpinned by steady economic growth, low unemployment, and low interest rates in the world's largest economy. Closer to home, Australian shares also added to the positive performance over the quarter for similar themes to those of the US. However, China, a major driver for global growth, was downgraded due to mounting debt levels. Also, tensions between the US and North Korea raised concerns, keeping global markets on edge. Looking ahead, we see an uncertain investment climate. The gradual economic recovery seen in many major economies since the global financial crisis has led central banks to begin transitioning away from the provision of monetary support and ultra-low interest rates, leading us to believe that interest rates will begin to rise, if slowly. This, combined with high levels of debt, could put borrowers under pressure, which could put downward pressure on asset valuations. As part of our active management approach, Rest continually monitors global markets so we can manage downside risk and capture opportunities. Therefore, in light of the investment uncertainty ahead, Rest has shifted its core strategy to a more defensive position, reducing our investments in shares and property and allocating more of the portfolio into lower risk asset classes, such as cash. This positions us to purchase assets at cheaper valuations if markets suffer a correction, while also helping to reduce the impact on funds if some of the risks we've referred to do materialise. Managing these risks is one of the many ways we aim to protect your super investment so that we can help in delivering the best retirement outcomes for our members. Thanks for joining us for our first quarterly investment update of the financial year. We look forward to updating you again on your super investments in 3 months' time.